We are FinTech Festival India, and we are coming to you live from the Silicon Valley of India, Bangalore. And our next session is on learning from the pandemic, the banking in the new world. Emergence of neobanks has played its part in making banking facilities available to a number of clients during this pandemic. And our next panel is moderated by Mr. V. Ramkumar, Senior Partner with Cedar Management Consulting International LLC, who is joined by Anish Achutan, Co-Founder and Chief Executive Officer of Open Financial Technologies, and Paroma Chatterjee, Chief Executive Officer, Revolut. Welcome to the FinTech Festival India, everyone. The stage is yours, Mr. Ramkumar, and over to you.
Thank you, Amit. Pleasure to be here and pleasure to be in the company of two extremely different and should I say energizing panelists, if I may use that phrase. We have with us Paroma. Paroma, I think for the background, which is starting with P&G, where you understand literally consumers, and then talking about ICICI Bank and Kotak, where you were in the financial services space, and back to again marketplace with Bharti Airtel, and after a lot of engagements, continuous engagements in the consumer space, now a very, very interesting role as the CEO of Revolut. I guess we are going to have a very interesting interaction today with you. And what do we have here? We have Anish. Anish is, should I call you a serial entrepreneur? Starting with 2001, where we started with iFutures and then the famous Cash Next in 2009, or was it 2008?
2008.
2008. And of course, more recently with what we are going to talk today about Open. It's an interesting discussion between an entrepreneur and, should I say, someone who is seeing consumer and the changing landscape of what we're seeing as expectations in the market. Thank you, Paroma and Anish, to join us today. If I may start with maybe with Anish, what is this whole definition of neo-banking and challenger banking? We have a lot of people who actually possibly use this interchangeably. We have the tides, we have the move-ins, we have every single definition that you can ask for. Is it the same definition around the world? Is it different in Europe and different in India? Please enlighten us.
So Ram, to be frank, even I often get confused between this term of neo-banking and challenger banks. I'll talk about what I really understood, and probably Parama may have a different view about it, which I would also like to hear. From my understanding, challenger banks are the ones which got a regulated license, like the way, for example, Paytm Payments Bank or a Bandhan Bank in India, or the likes of a Tandem in the Europe, or even a Revolut. And neobanks, there are in neobanks also there are licensed entities as well as the over-the-top players where they don't have a license, they partner with a bank. For example, Tide is an example on that side, or Open is an example for a thing. In India, you can't call yourself, we all know that we can't call ourselves as a bank unless you are regulated by RBI as a bank. So even the term neo-bank cannot be used, you call it as neo-banking platform or neo-banking service. So this is what my understanding bit of what a challenger bank and a neo-bank is.
Interesting. I see you're calling yourself as a modern business banking platform, is the way you like to call. Right. But I actually have, maybe I'll change the question slightly differently, if you don't mind, Paroma. And this question goes back to, we talk about neo-banks and we talk about challenger banks. The nomenclature aside, is there a certain gap in the current ecosystem that we see these banks looking to address? Is there a value addition that we didn't have before that is looking to be addressed, or is it changing the landscape completely?
I would pick on changing the landscape, actually. So as he pointed out, while we cannot officially use the term bank till the RBI issues a banking license, but yes, Anish here with Open represents more of what is termed a neobank, and we at Revolut represent what is more termed a challenger bank. And the essential difference is in the licenses, as Anish pointed out. Challenger banks typically get the banking and banking product licenses, the various product licenses, whether it's a lending license, or it's a payments license, or it's a forex license. And neobanks typically partner with banks or licensed entities to create the platform around that, to digitize it and offer it to customers, and aggregate other solutions beyond banking solutions, such as payroll, expense, etc. So that's essentially the difference. Coming to the gap, if you look at the way financial services have evolved, financial services have evolved from using cash to digitizing to various different opportunities. So basically, challenger banks and neobanks are trying to both together reinvent the way financial services are consumed by the customers. They're both, the characteristic that is common to both is they're both digital first. So imagine a banking system with no bank branches and no cash, fundamentally. So you don't need an ATM to withdraw cash. You don't need bank branches with tellers. You don't need ATMs to go to, right? That's what this universe is trying to solve for, where you can do all your financial transactions digitally. That's what's common to both these types of entities, with the difference being that a challenger bank has its own license and offers its own products in a digital form, while a neobank partners with licensed entities to sort of put it together and present it in a digital consumer experience to the customers.
Very fast, very interesting. And if I may just go back for a minute on that, I mean, does it necessarily stay that way, or you've seen, you know, do they converge at some point, or you see them to actually be?
So that depends. I mean, as he pointed out, globally, Revolut does represent the one of the leading challenger banks globally. Monzo represents a leading neobank. In India, Paytm Bank is evolving into a challenger bank, while the likes of Open and Neo, it stands in the name itself, are representing the neobanking. If you look at the size of this industry, by the way, in 2018, it was 18.6 billion USD across the challenger and neobanks. And it is growing at a compounded annual growth rate of 46.5% over the last 2 years. And it is positioned to grow at the same rate till 2026, as far as projections are, publicly available projections are concerned, which means that in 2027, this is likely to be a $470 billion being processed by the challenger and neobanks together. Now, we spoke about the differences. Where do they converge, to your question? I think if challenger banks also start aggregating other solutions, such as accounting solutions, expense management, payroll, other financial needs which go beyond pure banking and regulated solutions, is where it creates a holistic solution for the customer. Neobanks, likewise, approaching it from the other side, if they manage to get licenses, or the regulator starts looking at it differently and starts issuing neo-banking licenses and bring these products into the purview of a licensed entity, is when the two might actually end up converging and standing alone as a pillar of the next innovation of the way banking is done.
Very interesting, Paroma. I mean, incidentally, you know, we at CAGR, we have a UK-based financial technology, you know, research and publications firm, which is called IBS Intelligence. And we actually have this interesting, you know, event coming up. There is a Neo Challenger Bank Awards that is actually being announced, you know, later this year. And this compounded rate growth that you talked about is something, and someone was asking us, you know, how do you see this, in which other parts of the world where you're seeing this to actually be highly intense? And interestingly, I mean, of course, there is a lot of action in the UK market, but one does see a lot of action in the Indian market, right? I mean, I was having this chat with Anish earlier, and you were telling me that you already have 1 million customers, and you said you already have started processing about 18 billion transaction volume annualized?
Right.
That's a number, right? I mean, we are talking about some serious numbers there. So what would you, and if I may go back to you, Anish, and then I'll you know, taking from where Paroma has indicated about this global growth and also the learnings along the way. If you had to tell us, you know, and you have obviously seen this over the years with various types of institutions, what learnings would you think actually that have been picked along the way are more applicable and relevant to the Indian context today?
Right. So, if you really look at the neo-banking / challenger banking scenarios in Europe and US versus India, there is a lot of differences. Traditional banks in you know, Europe or US, their interfaces are really bad when compared with the likes of in India. In India, we have a Kotak or a HDFC, which is pretty advanced in terms of the user experience. So most of the challenger banks or the neobanks initially played a role of a better user experience or a convenience factor in those markets, which may not really work in India, because in India people ask, why should I change my account from a Kotak to a neobank, right? So then it needs to have a considerable value that actually, in case of, for example, in our case, in terms of a business, unless it helps in considerable value to that business, the business will not shift from their account. So you need to localize for the Indian audience in terms of the value proposition is a lot different. So I don't think like, so what we can take from the outside market is obviously like the good things, like the better user experiences, the way in which like, better looking cards, and mostly also the niche solutions targeted for the different segments, whether it is the teenagers or the millennials, those aspects.
I go back to you, Paraman. You and I had this very interesting chat earlier about how this is now digitally native, and it's not about moving from a conventional, why should I move from having an account that I have and why should I open a digital, and you were talking about this concept of how things are known. It's not about moving from one to another, but actually being digital native. You want to share with our audience about what your thoughts are? This very fascinating inputs you had that day.
Yeah. So I was actually talking about if you look at the world as it is evolving around us, and I'll take on the Europe and India contrast in that sense as well. If you look at the demographic profile of our country right now, we know we have 1.4 billion population, right? But you know that 600 million out of that are between the 16 to 40 age group. So we're a very, very young country. And within that 16 to 40 year age group of 600 million people, 85% of them have smartphones, while 50% of India overall does. 85% of this segment today is on smartphones, which is enabled a lot by affordable smartphones in the country, about dropping data charges, which has totally exploded the infrastructure, which has made this segment of India and the young India and the youth digitally native. And what I mean by digitally native is they start digital first, right? Kids today are starting with online classes. They think of classes as online, right? They think of not picking up the phone and calling, but sending a text message on WhatsApp, even if it is vernacular to send it on ShareChat. So that's a digital native behavior, that your first default option that you look at is basically picking up a phone, looking for an app to do it. You want to take a picture, you don't look for a camera, you again look for your phone to take a picture and send it out online instead of looking at printing it. That's another example of digital native behavior. And most of the young India is actually that. That's in contrast to a lot of other country demographics where the age profile is slightly older, they're already banked, and it's a behavior change that's happening.
Correct.
Which uniquely positions us in India. And again, to look at some data points that is going on in the FinTech ecosystem in India, today, as on date, we have 2,174 FinTechs in India. That's wow. I mean, so many FinTech companies sitting in India with between 50 to 60 billion USD worth of valuation between us, right, in an India.
Right here.
Yeah, and most of that, I mean, 67% I think of that has come in the last 4 or 5 years. So there is a unique position to now look at this young India and look at banking for them starting with an app. It's not about them opening an account in a traditional bank with a passbook and a checkbook and then changing their behavior to, instead of writing checks, to going on to net banking, which is what happened back in 2005 when actually NEFT was introduced, right? Or getting them to switch behavior from paying in cash to paying in cards and then using an app to pay. That revolution also happened all the way till 2010 and post 2010. Now it's about the people. They don't even need to think about going to a bank branch to open an account. Your account can be sitting on your phone for everything that you want to do in terms of financial services. And that's the opportunity that is sitting there for the digital native consumers, and which the challenger banking and neobanking ecosystem is actually trying to cater to evolve a new generation of customers who will bank in a totally new way in the next decade or so.
I completely agree. And in fact, this example you gave, right? I mean, the fact is there is no unlearning to be done. And you actually are starting straight away with, what you call as the de facto approach of banking is digital banking. And the example you gave, about, how children today believe or understand that classrooms are digital by default. Having a physical classroom is actually more of an extension. I'm involved with an NGO called Revolut, which has been doing digital learning for the last 10 years. And we keep saying, look, I mean, it's fascinating how the COVID situation has changed our dynamics across the world, be it education, be it banking, and be it, online grocery shopping. I mean, it's changed the way we look. We'll come back to COVID in a second, but I want to pick on something that you said, Proma, which is very interesting, right? You have witnessed, you have seen how customers, consumers have actually been changing their preferences and needs with evolving social, economical context that's happening around us, right? And now we actually have more than the socio-economic context. We also have the context driven by what we are seeing as the necessity driven by COVID. Pandemic context, right? So if I was to ask you, and I'd probably split this into two parts, and maybe the individual part with you and the institutional part with your respective hats you wear. How do you see the customer needs evolving, and how do you see that how do you see them having changed over the last few years, and how do you see them going forward?
Okay, I'll go first. That's okay. We'll talk about the individual needs first, yes. And then defer to Anish for your experience on the business needs. We anyway spoke about the digitization and the digital need that is coming in for the individual in this demographic segment. The other phenomenon which goes along with it is a lot of exposure and education. So there used to be a knowledge disparity earlier based on what you could consume. That has been bridged to a large extent today. So whether the same 16 to 40-year-old that I'm talking about, if you're an early 20-something, whether you're sitting in a Bangalore or a Mumbai, or you're sitting in an Arunachal Pradesh or in Port Blair in the Andamans or anywhere, the amount of information that you have access to today is pretty much identical, right? With that information and exposure, the ambitions also of all of those individuals are pegged at the same level, right? Why should not everybody have access to the same thing regardless of where they are geographically or where they are in the socioeconomic strata? The socioeconomic strata has also got blurred in the last few years. And now I will superimpose this with banking, which we're talking about. Traditionally, banking was also divided by socioeconomic strata, right? You had mass banking, you had private banking, you had wealth banking, and it was assumed that your requirements and set of services were different based on your socioeconomic status in life. Today, those lines have got blurred because you can be anybody. You can be a first jobber earning your first salary and want to invest in the stock market. Today's ecosystem digitally makes it possible for you, right? Today, you can be that same first jobber, want to buy Tesla or Facebook stock internationally. It can be made possible for you, right? Today, you may want to trade in gold, buy gold for yourself or trade in gold or any other commodities. Today, it's possible in small, what I call sachetized products.
Interesting.
When you put it technologically, you're able to deliver all of this to the consumer. So to be able to break down what earlier used to be the preserve of a few, to bring it to everybody is, again, the other thing that's breaking. And I think it's, apart from just digitization of services and financial services, I actually think it's more about democratization of the services and financial services to make it available and accessible to anybody who wants to use it to improve the quality of their life. That is what is happening on the individual ambition and needs right
Very fascinating, Paroma. I mean, in essence, you're saying there's no need for a critical mass for any consumption to be made. You could actually monetize, or you could actually break it down to the smallest unit that could actually be consumed. So, whether you are actually investing in a Tesla stock with 1 unit or 100 units, you still can actually do that, right?
Absolutely. And with technology and machine learning and the data availability, you can customize it for each individual's needs.
Got it.
So you want to invest in something, Ramkumar can be treated as independently as Anish wanting to do something totally different, as me wanting to do something totally different. It is possible today.
Correct.
Right? Earlier, we were in the era of mass customization. So we were creating differentiated products, but in a certain bulk, looking forward to critical mass availing that particular product.
Before I come to Anish, and I just want to continue on just one important point you made, Paroma, and this is actually maybe a fundamental shift that we are all observing here, where from being a supply-driven market where the banks were determining what ought to be given to the customer, what we are seeing now is a revolution where it's
I'm glad you used the word.
unintentional, but why not, pun intended. Why you actually have a situation where you do have a demand-driven economy emerging, and the demand-driven economy has two elements to it. One is the latent demand in itself, which is quite obvious. It has always been there if you look at it from another way. But having the opportunity to articulate it or actually give it a shape that could actually then be customized the way you just talked about, right? Thoughts?
Yeah, so actually very well articulated from a supply-driven to demand-driven, and I'll probably demonstrate that again through an analogy like loans, for example, right? If you're looking for a home loan earlier, or a car loan, or an insurance policy, you would have standard rates, standard fixed rate loan, floating rate loan, right, which is pegged by the bank, which is defined by the banking system. You like it, you take it, you don't like it, go to another bank, shop for it, you like it, you take it, you don't, too bad. It was kind of like that. Today, you can actually customize an interest rate for every single individual who's applying based on their need, their risk profile, etc. You can customize an insurance policy for the premium that needs to be paid. So that entire one aspect of demand-driven growth of products and businesses is definitely one phenomenon. And to your other point around information, again, the access channels, like having it on your phone, on your app, makes it possible to have a two-way conversation with a company.
Got it.
Earlier, it was more a one-way conversation where a company had to think about what it needed to talk to the customers. And you would have to resort to television advertising or taking something out in print or issuing pamphlets which are kept in your branches. Then it evolved to the call center to make certain calls, put up some information on your website. Today, it's literally on your phone, and it's customized and personalized, the notifications that can be sent to each customer.
Correct.
Customer can converse with the company based on their needs, articulate their needs, and have solutions worked out for them. That is also how the evolution is having, which is bridging the information barrier as well as the product and service availability
Beautiful,
barrier.
very, very well articulated, Param, and I'm glad you mentioned this, because that is pretty much what you are attempting to do at Open here, right? Where you actually are creating what could be the same thing from a, not an individual but more an SME and startup ecosystem standpoint. Your take on the evolving or the changes that you're experiencing or you're foreseeing to happen, and obviously the reaction that you also wanted to add to what Paroma mentioned earlier.
Yeah. So a lot of things are similar to what Paroma mentioned for the consumer segment. It is applicable for the SMEs. Firstly, the penetration of the mobile internet, the geo effect, and the WhatsApp.
Geo effect, is it?
GEO, you mean?
And then obviously the demonetization. That's when the merchants started putting this QR codes, because they realized that, okay, if I need to accept payments, I need to have something like digital. So started with the Paytms, the PhonePe, the Bharat Pay. And then they started realizing that there are like applications specifically meant for businesses to help them automate their accounting, like Kata Book or OK Credit. And then they started searching for different other applications in the App Store, the ecosystem, and they realized that, okay, there are digital tools now available for me to help me automate my business finances. Or then there are like the likes of the lending providers who actually can help me get a loan, probably even without like much windage, basically, or a 6 months. So merchants becomes more aware, and that actually led to the creation of this ecosystem. So lot of this ecosystem is created forcefully, I would say, probably because of like the demonetization and some of the things which is in like natural progression, which is like the internet penetration, and then automatically then the the merchants or the SMEs or the small businesses, they took on it. Basically, they actually started looking forward for adopting this. And the way in which it is looking forward is like, like what Parama mentioned on the consumer side, getting access to easier loans, because now probably a FinTech would have access to a business's balance sheet, profit and loss, by providing him with the banking services, which can help a FinTech provider to create a tailor-made credit product or a buy now pay later product. Because the lending, unlike consumers, in case of businesses, the needs of each business are unique. And this is where intuitively these providers can actually help us. Or in terms of wealth management, because in current accounts in India, as per regulations, businesses don't earn anything. But small startups and larger companies, they do treasury management. Now, fintechs can actually help banks to move the money overnight to liquid funds or like fixed deposits, get them back whenever they need. So the possibilities are endless, and what we are actually going to see is like 5 to 8x gem than what we are actually seeing year on year, because a lot of the things accelerated, and obviously pandemic, which we'll discuss, also accelerated this,
So the demonetization impact and the internet and mobile penetration impact, and then the pandemic impact. How much of the pandemic impact triggered or the impact we are seeing because of the pandemic is there to stay for the long term?
Yeah. One more point I forgot to mention on the previous thing is like also the millennial savvy entrepreneurs, the ones who actually, the homepreneurs who sell on Instagram or Facebook, or the gig economy workers, their needs were not served by the traditional things. Even they started discovering that, okay, maybe there is a fintech who can actually help me freelance checking account, basically. I'm just giving an example. Right?
No, why not?
So those type of things also are added to that. Now, specifically in terms of the pandemic.
That is one area, by the way, where SME side of banking and the individual side of banking converges.
Converges, right.
True, very true.
Yeah.
Homepreneurs.
Yes. Back to you, Anish. Yeah.
So, in terms of the pandemic, what we have seen, at least in open, is that we have seen a lot of businesses shutting down in certain industries or verticals like travel and other areas. But we really saw like more and more new segment of customers coming to the platform. For example, YouTube influencers. They realize that, okay, when I'm earning money from YouTube, I need a checking account, and then if I get tools to help automate my income and expenses, then we also see like a lot of traditional businesses who otherwise would not have adopted a digital tool, started adopting that, realizing that, okay, now I need to, if I continue to do business like the traditional way, then I'll be out of business. So I want to adopt something digitally. So mostly not only for open, but all of the ecosystem providers, whether it is payment gateway providers, all of us have actually seen like the first 3 months after the demonetization, after the pandemic, the first 3 months was like really tough, but post that it actually started to increase to
Get used to it.
Yeah.
No, but I actually want to go back to this banking services, since the topic today is about the new banking services for the new world. Is there a distinction that you see or you want to draw between the asset side and the liability side of banking services, when it comes to the same customers, right? I mean, we did see, for example, 10-15 years back, there was this whole microfinance initiative that actually was catching a lot of steam, right? And again, going back to the analogy we spoke about Paroma, it was actually more supply driven, whereas what we are seeing now fundamentally is demand driven, and we could see the distinction there. But that aside, do you see the evolution on both liability and asset side with the same intensity, or do you see a distinction between the two?
So definitely, whenever like what we have seen as a pattern is like whenever we started launching our lending product, that's when we actually see the number of like signups increase, because everybody needs a loan, right? There is a huge gap. But on the other side, when I actually have to offer them a current account, it's a lot still driven by push, or like we have to use the alternatives. So there is definitely like a gap that exists between both the assets and the liability side, and it will continue like that, because I don't think that it will be, because the gap on the on businesses or the consumers needing capital or money is like much higher than that.
More evident and more latent. Would you agree with that?
Yes, that is one part that I agree with, but I'll put a slightly different spin on that, if I may, which is more a regulator lens to this. Taking liabilities is of a much higher order responsibility for the banking ecosystem. You're asking customers to trust their money with you as a system.
True.
So the ecosystem needs to evolve a little more, needs to prove themselves to be a little more robust to ensure that customers' money is protected by this ecosystem. And I think that's, I personally agree with that, and I also think that's the lens our regulator, which I believe RBI is a very forward-looking, thinking regulator as well, and we're quite blessed to have that kind of an orientation in our country over the last 2-3 decades, which has put our country in very good stead historically. So with that lens, even the RBI is slow about giving out liabilities licenses, and that is much more regulated. Licenses are required, whether it is gradually payments bank licenses, small finance bank licenses, or eventually a banking license, or the license to open a branch or a subsidiary. Those are highly looked at and regulated, and you have to earn your stripes and prove yourself before getting there. So which is also one of the reasons why the innovation on liabilities you would see being more solid when it happens, but being more gradual in terms of pace. Whereas on the asset side, the one point that Anish brought out, which is the latent demand being there, and also it is the fintech ecosystem's money which is being given out to the people. So when that money is made available and can be deployed in avenues which can generate revenue for both the user as well as the supplier, that is an comparatively easier problem to solve, and a lot of people are trying to solve that in various ways.
I mean, 15 million customers, is that right?
Yeah, Revolut has 15 million customers.
And obviously there is some global learning there as well, you know,
Yes,
from that standpoint,
absolutely.
right? Because the phenomena we're talking about is relatively global, I would assume, that
Yes.
you know, customers are more willing to take money than give money. So asset products take the cue first, and then, you know, you have the liability follow. But I have a
Revolut's evolution, though, has been a little different.
please.
Okay.
No, I'm all ears.
So Revolut has focused on the first part that we spoke about the consumer experience of banking first, rather than looking at it as asset products or liability products, right? It started off with the use case of blurring borders. Of if you're in Europe and a youngster who's earning in Europe, right, wants to travel around Europe, backpacking, when you go from one country to another, you should seamlessly be able to exchange currency, you should seamlessly be able to pay, you should seamlessly be able to book a hotel, and
feel like a local, as you call it.
Absolutely. One of the reasons behind stress related to travel is to do with money. In order to get a forex card, or in order to load it with foreign currency, change it as you go to multiple countries, doing local bookings, that is a hassle. That was the original genesis of Revolut 6 years ago. From there, it obviously evolved into making the user experience better for customers to avail of financial products, whether it is on the asset side or it is on the liability side. So payments has been core, the user experience has been core, and from there, it has evolved both branches in both directions, if you will.
Got it.
On looking at getting banking licenses and other payments licenses in various countries, looking at getting trading licenses in various countries. We've got trading licenses now in Singapore and Australia as well as outside of Europe. And then to look at lending licenses to be able to do it. So it's about creating that transactional ecosystem in the best way possible, and then looking at liabilities, trading, and assets around
it.
And that's kind of what we intend to do in India as well.
Very nice. And you made two very important points, Paroma, and I'm going to go back to both, right? In fact, there was one element about trust. I'll come back to that. That's an extremely critical area that, you know, we clearly see as a need of the hour. But if I go back to the earlier point, which is about customer experience, and you actually made a very important statement saying you actually started, the whole proposition was actually built around driving better customer experience, right? Now, if I go back to one of the earlier discussion threads we had in this panel, is are there latent gaps in the way things are today that the new challenger banks are seeking to address? Would there be an element of customer experience that is perhaps absent, that is actually being addressed by the new generation neo challenger banks? Either of you?
Yeah.
Okay. If I were to divide it into different things, okay, different aspects. The first aspect which we spoke about is accessibility. There is a gap in being able to access traditional institutions, even if it is with an online application, or because it's essentially, as you said, a supply-defined product, defined by the supplier, with a digital wrapper around it to enable ease of application, but it still doesn't create full access. So that accessibility is one area which I think people, our ecosystem is trying to solve for. The second is the information gap, which we also spoke about, where to make all the information, again, I like to use the word sachetized, and customized to each individual's need for information rather than blanket information. and being able to send it for meaningful decisions to be made by the customer. And I would take information to the next level of calling it advisory, using information to do advisory. That's a third gap, about genuine advisory being given by the financial ecosystem on what is the right product or service and the right manner in which the customer should be using it. The fourth gap that I see is the feedback loop. So again, I'll share an example on Revolut. For example, we have a way in which you can track your money flow just like you can track a pizza delivery. Right. So today, if you're doing a transaction, and let's say your transaction is stuck, or you need a refund and it's stuck, right? Following the trail of your money is not easily possible.
That's right.
So the other gap is the feedback loop about what is going on inside the banking system as a customer. To be able to break that down and make it transparent to the customer is, I think, the fourth area where a gap exists. The fifth area, which is more on the asset side, is to do with being able to, again, democratize decisioning to give asset products, which is...
That's a loaded statement. Democratize decisioning to offer asset products.
Let me try and break that down. It's about basically using a lot more personalized information of customers to be able to take richer decisions rather than having blanket standardized criteria in which to fit everybody to see who fits the criteria.
So I don't decide for you. It's actually a process that you get to decide together, right?
Correct.
I mean, there is a interaction.
Yes.
There.
So that customization, genuine one-on-one customization, is the fifth gap, and the sixth and last one, I would say, would be around profitability and cost effectiveness, actually.
For the customer or for the intermediary?
Both, actually.
Okay.
So when I talk about the supplier, one of the reasons why it couldn't go traditionally that deep, and which is why financial inclusion is still today a top of mind agenda of this entire country, and we're working towards solving for that, is because given the business model and the costs associated with the way the financial product is delivered, at the end of the day, you have to have an ecosystem that is self-sustaining and making money to keep scaling that up. So that sustainability is another thing, the last piece to solve for. And from the customer's leg, therefore, by being able to bring these costs down, using technology, you can pass on that benefit to customers to make it more affordable for customers.
But I still want to, bring back the element, the reference that was made to the trust element, right? But before I actually go there, I have a bunch of questions from some of our people in the audience, and I'm going to pose them to you. Maybe this question is to you, since you've actually been all through in this fintech space. Is fintech a bubble like .com? This question is from Bala Bhaskar.
Fintech is definitely not a bubble. Fintech is now an essential part of everything what we do, whether we are taking a cab ride, we're paying through a buy now, pay later, or even an Uber driver getting his money into this thing and getting loan. So it's now part of very
part of the ecosystem.
Essential. And you will see now more and more non-fintechs or corporates embedding financial services, which is itself is a different topic.
We have a staunch advocacy out here. And this one is for you, Paroma. This is Kamalika Podar asking this question. And yet, lending and wealth product is a distant dream for the blue-collared worker. Is there a solution for this segment? I think she's asking the question going back to the point you're making. Go ahead.
Okay. Again, it's a good point that you brought up, Kamalika. So lending to blue-collared segment used to be a pipe dream. It no longer is. There are startups who are actually there working to solve this problem, to look at giving loans out. There are payday loans available to small ticket loans available for this segment. And yes, you've identified an absolute opportunity where a need exists. And yes, there are people in the ecosystem who are working to solve this problem and can be solved for sure.
I mean, I would tend to agree and hope so as well. As we see the changes happening today, this is, as we said, there is a shift from being supply driven to demand driven, and therein lies the story. There's a question from Nitin Kanaugia, and this question I would like to take with you. How can the cooperative banks in India effectively leverage the evolving fintech ecosystem?
So one definitely is from the regulator. All the urban cooperative banks now has an option to convert into small finance bank. But other ways, there is a larger opportunity for cooperative banks to partner with fintechs to offer more innovative or modern financial services, which other ways these cooperative banks were not able to offer. And there's also it's a larger opportunity. The only thing is like because of the structures in which currently the cooperative banks are there, because the political the control and things like that. A lot of fintechs have actually tried in this model, but it takes a lot of time to actually get there. But there will be winners, and what we are seeing is that there is a change in mostly the corporate, they are willing to change right now compared with what it is.
Would it be fair to say that change is more, let's say, easier or faster with a smaller footprint than a larger footprint bank? Would that be a fair statement to make?
Change is fast, because the problem was the cooperative banks, they were mostly driven by the political thing, and that was a bigger challenge. But now it's an existential crisis. If they don't change now, they will lose out on that thing. So it has reached that point, and that's what it is. It will drive.
That's very great.
I'll actually take on his first point to say that, I mean, if those of you who are out there who are from cooperative banks, yes, there are meaningful ways to partner with this ecosystem. Right. And yeah, you can reach out to both Anisha and me if you're looking to partner with the leading players.
This is live advertising here. Okay, but I have to go back to you, Paroma, and this is actually again from Bala Bhaskar, and this is going back to the discussion we had about microfinance and how we actually have every single bank, every single customer, whether he is the first salary winner or if he is actually independent of his age or socio-economic status. The question really is, can banking for all, is it a distant dream or is it real now using fintech?
Very, very good question, Bala, and I'm glad you brought it out, because that's what I love to say that we're here for, to actually enable banking for all. And it's no longer a distant dream. So whatever we've been talking about today in the panel is also oriented towards making this available for every individual. Today we can go down to 2,000 population villages and access the customer there and provide them with the same solutions that are available to those of us who are sitting here in Bangalore today.
And not just individuals, I guess the discussion goes even to the
smallest entrepreneur who's sitting there, and to Kamalika's earlier question, to even women entrepreneurs who are there. The other advantage of a technology-driven ecosystem is it does not judge. It does not judge for a gender who's walking into the bank branch, or judge based on what your accent is like when you're talking or speaking, in what language or what clothes you're wearing. It is hardcore, hard-nosed data. So whatever your data is the truth about you as an individual, as person X, person Y, and technology can look at you for who you are and be able to give you the solutions that you really need, and that can be done for every single individual.
Brilliant. Very, very well articulated, Paroma. And if I can go back now to this element of, as customers increasingly are seeking to drive their relationships with institutions which are now fintechs and neo-challenger banks, and they are dealing with money here, the concept of driving an element of trust, it becomes imperative, right? And sustenance is not just enough. It has to be more than just sustaining the business model and actually being able to demonstrate that comfort to the customer in the long run, right? Are there learnings from what we have seen around the world that would be important for the fintechs in India, and particularly the kind of players we're talking about that need to emulate or keep in mind?
You brought up, I mean, again, probably the most important point in the customer's mind when they're coming to a technology-driven solution, so to speak, is trust. At the end of the day, as human beings, we trust somebody that we can see face to face, we can walk up to, a physical presence that we know this is an office or a physical branch that we can walk into if something goes wrong. And especially when it's something as core as hard-earned money for people, whether it's an individual or a businessman, yes, that trust factor is topmost when it comes to banking. And with technology, yes, regardless of the amount of advancement that has happened in technology, there is an element of that last bit of a hitch to go and say, hey, can I really trust my money on the cloud? I hope it's not going to disappear somewhere. I hope the transaction is going to go through. And if I don't have somebody to talk to directly, if something goes wrong, what do I do? Those are logical questions. And the burden of proof falls upon us to ensure we build systems that are strong enough to ensure 100% processing of transactions with no error. And the I can say that the systems are capable of doing that, and that's what we're developing, right? But the proof of the pudding is in the eating. As more and more people experience that it is a trustworthy, fail-proof system, and more companies set out to prove that they're building fail-proof systems, is when the two will come together, and that trust bubble will probably burst, and
it's a very interesting answer. I mean, you actually have literally shifted the center of gravity from interpersonal, let's say, emotion-driven factor to what could actually be resilience-driven by technology, right? I mean, that's a very fascinating outlook, I must say, Paroma. Here is another question. This one is for you, Anish, from Venkatraman and Sriraman. His question is, can FinTech lending ease micro entrepreneurs from the clutches of a hostile cash-based money lenders who actually charge anywhere between 100 to 200% of cost of capital?
Definitely, right, because today it has started few years back with the POS-based lending, and now there are a lot of fintechs which is actually working towards targeting this segment of customers to help them underwrite loans based on various parameters using the mobile data, the social scoring, and things like that. And at a, I won't say at a lower interest rate, but at least take them away from the clutches of the traditional money lenders.
So this one is actually on the money lender part, and let's actually switch to another question that's also coming here. And how about early warning signals in future in the way to actually catch individuals in predicting defaulters, as we move ahead, right? So that's a flip side of the money lender situation, the rogue borrowers. You want to answer that?
No, definitely. I mean, in any system, right, there are people who will always look to game the system, right? And it is the duty of responsible companies to be able to put in systems to be able to track that. I will again come back to, as you articulated it, the resilience of technology, right? With technology, you actually take away the subjectivity of an individual assessing whether I look at you and I think I can trust you or not. I mean, I'm not taking it all the way back, but yeah, I mean, basis
the
some fundamental
instinct, as they call it, yeah.
But you can, again, with technology, look at a lot of data, behavioral data across platforms to be able to anticipate how somebody is going to behave.
Yeah.
Starting from, I mean, we've known skips, like people who have taken the money and moved away by looking at Facebook check-ins to know where they have gone. So using technology, there's a lot of information about a customer available, which enables you to take those decisions. Having said that, I will again put this burden of responsibility out there that it has to be done with acute responsibility. Because there is a fine line between intrusion of privacy and being able to utilize data for the purposes that it is meant to be used for.
The type 1 and type 2 error, as they call it.
Absolutely. So again, our companies are working towards creating those kind of models that use data responsibly and with permission from the customers. But there is a lot of data, if used intelligently, can track whatever type of behavior that you want to track, starting from good behavior to be able to extend additional lines to those customers, to bad early warning signals to be able to anticipate a potential default and take action in advance from
And that's here to stay.
That, I mean, going back to your earlier question, what are the things from the pandemic that's here to stay? Certain behavioral things like this, technological advancements across education, health, finance, I think are here to stay.
Finance, education, and so it's a very interesting analogy between education and banking here. As someone who actually is closely associated with both these fields, I must say that I see three distinct patterns evolving, and we'll close the panel with this. One, we definitely see democratization of services, and we see them to actually be now at the grassroots. Two, we clearly are seeing a shift moving from supply side to demand side. And third, to your favorite point, Paroma, we are seeing this to be driven by technology and actually enabled by people but driven by technology. Would that be a fair statement?
It's a very good summary, Ram.
Thank you.
Where there is life, there is hope, there is meaning. But life has its downs as much as its ups. Life is about challenges. Life is about opportunities. Time for joy, time for celebration, and time to introspect. Thankfully, In every one of life's moments, and even beyond life itself, there's LIC. Where there is life, there's always LIC. Zindagi ke saath bhi, zindagi ke baad bhi.